Hey guys, how's it going? I'm Lewis Harding Investor and welcome back to my channel. And in today's video, I'm going to be analysing Kingfisher stock. I'm going to be using fundamental analysis to see if the company is worth buying or not. I'll be then using a DCF valuation to determine the fair value of their stock. Let's get straight into it. So who are Kingfisher? So Kingfisher plc is a British multinational retailing company headquartered in London, with regional offices located across the UK, France, Poland and Romania. It has over 1,300 stores in 9 countries, and it has brands including B&Q and Screwfix. Kingfisher is listed on the London Stock Exchange and is a constituent of the FTSE 100 index. Now let's have a look at the sales summary for Kingfisher, and yeah, there's not much of a breakdown apart from home improvement products and services, but you can see it is up a decent amount from 2020. But yeah, sales per region, so the vast majority of the sales come from the UK and Ireland, making up 47%, and then France makes up 35%, and then Poland makes up 12.6%. And then yeah, the rest makes up 6%. Now let's have a look at the income statement, and these figures are all from Morningstar and it is all in Great British pounds. So yeah, let's have a look at the turnover figure to start with, and yes, over the past 5 years the turnover is up, which is fantastic news. The previous 4 years it's remained pretty stagnant, you'd have to say, especially the past 3 years, not much movement really. 2021 has been a great year. But yeah, then yeah, let's have a look at the net profit. Yeah, bizarrely, in 2017 they made more profit than they did in 2021. So yeah, who knows what that is about. I can see the net interest figure is a lot higher. Maybe they're paying more interest now with a little bit more debt, so that's why the profit is down. And yeah, so let's move on to the next bit. Now let's have a look at the balance sheet, and we will start with the non-current liabilities, so otherwise known as long-term debt. Yes, over the past 5 years this has increased by a decent amount. In 2018 it's increased by over £2 billion, so I wonder if they made an acquisition. I guess you'd have to do some research and see. You'd like to hope so, because the business didn't necessarily seem to need any debt, so maybe they've made a big acquisition and used debt to do that, which is acceptable to do that, to be fair. And then yeah, let's have a look at the shareholders' funds. Yeah, it's actually down over the past 5 years, and you want this to be going up over time. Let's have a look at the cash flow statement now, and yeah, on the Morningstar ones there's not really much to say apart from let's have a look at the operating cash flow, the main bit of free cash flow. So yeah, over the past 5 years this has increased, which is awesome to see. Maybe that acquisition which they might have done has increased that, so awesome stuff if that is the case. Now onto the key financial ratios, and we will start with the profitability, and yes, so the profit margins fairly consistent apart from the past couple of years. The low single digits expected for retail companies. You don't expect high margins with these sort of businesses, and we'll get onto that in a bit. But return on equity, not fantastic. At least it's pretty consistent apart from the 2 blip years. Could be worse, but you know, it could be a lot worse. Gross gearing, yeah, this is pretty decent really. 38% gearing, I like it below 50%. Yeah, awesome really. We've got enough cover to pay the dividend, to pay the interest as well. Current ratio is above 1, which is fantastic. So yeah, not bad on the ratios kind of things. Now let's have a look at the genuine impact stats for Kingfisher, and yeah, you can see from the value metric it has got the shield around it, which means it is one of the top value companies on genuine impact. But we'll start with quality. Yeah, pretty mediocre, with high profitability, so which is not too bad. Pretty bog standard, bang average. Could be worse, could be better. But then we got into the value side of things, and on all metrics it's looking cheap, if not very cheap, so interesting stuff. 7.6 forward PE ratio, interesting, is what perked me up to this company in the first place. And then looking at the growth metrics in the bottom left hand corner, yeah, not too bad. You know, some very high, some medium. So yeah, the revenue's medium, earnings per share is very high, so yeah, pretty interesting, not too bad. Now onto my analysis checklist for Kingfisher plc, and the market cap of this business is £7.1 billion, and yes, the PE ratio is 8.6. Earnings yield of 11.5, wow. That is very, very low. On to the first pillar, and yeah, the profitability margins. So gross profit margin and net profit margin don't quite hit the mark for what I'm looking for. Unfortunately, return on equity is also a bit mediocre. But thankfully, the long-term debt to equity, so that's actually the full debt to equity, that's the full gearing ratio of the business. So yeah, very decent, and current ratio above 1 as well. So solid debt-wise, just needs to be more profitable. In my head anyway. Proven ability to grow, revenue has grown, net income is slightly down by like 1.8 million, so not that much. Or is it 18 million? I'm not good with my, with the K at the end, it puts me off. That's just for Google Sheets, makes it easier for me than having big numbers. Shareholder equity is down, but free cash flow is up, like £1.4 billion, which is awesome, really good. Great capital allocation. Unfortunately, they've increased for long-term debt in the past 5 years. You'd have to take this with a pinch of salt if you have made an acquisition, because if it does add good value to the business, then it's well worth doing. Dividend growth. They did cut the dividend in 2020, 21, whatever it is, which is the prudent thing to do. So it is an X, but it was the right decision probably. Decreasing share count. They have issued a few shares, so that is an X. Good acquisitions. I didn't actually Google it, so you'd have to do your own research and Google what acquisitions have done. But I'm going off the basis that they own a lot of retail brands which are very popular, especially Screwfix and B&Q. They are very popular in the UK, and I'm guessing the European stores are very similar as well, but you'd have to do your own research on that. I haven't gone that in depth apart from the numbers. But yeah, ultimately, buy at a fair price. The most important pillar, it is showing some good results. On the earnings and a free cash flow basis, it's looking pretty decent really. 7 for a price to free cash flow ratio, that is very low, so yeah, interesting. But yeah, unfortunately for a DCF valuation, for a 10% return, I would like a share price of £2.90, and with the share price at time of recording of £3.37, it needs to drop by 14% unfortunately, but it can get there. 14% drop is not unreasonable in the stock market, so yeah, let's move on to the DCF valuation to see how I got to them figures. Now to my DCF valuation for Kingfisher, and my free cash flow estimates have come from Market Screener. Check out their website because they do have some good bits financial ratios wise, including free cash flow estimates from analysts. So yeah, I like to pinch them and use them in my own models. Required rate of return of 10%. We're coming out with a share price of £2.90. So yeah, like we saw before, it needs to drop a little bit, not too much. In the past year, 18 months, it has been at this price. So yeah, maybe one to wait for. Financials look okay. For a retail business, they look good, I guess. I don't think retail's one of the best places to put your money personally. But yeah, hey ho, it's looking not too bad. So what are my thoughts on Kingfisher PLC? So yeah, I think it's a decent business really. Margins wise, it's not quite where I want it to be. They're not quite as high as I like them to be. I like high margins because this does indicate a better business. But in terms of the retail side of things, they are usually in the single digits profit margin wise. So yeah, you can't really knock them. They've been pretty consistent over time. They had a really good year last year, so you've got to take that into account. But overall, it looks like a pretty solid business. A low amount of debt as well, which is good. And they have got some solid brands with B&Q and Screwfix when you think about it. I've been to B&Q many times when doing stuff for this house. It's just a really easy place to go if you need anything. Screwfix as well if you're a builder or in the trades, easy way. And these brands are not going anywhere in the UK. I can't think Screwfix competitors, probably Toolstation, but I don't know who owns them. Yeah, pretty decent really. What else? Capital allocation. I think a lot of that capital allocation stuff going into the future will be a lot better. And then you'd expect their revenues and profits just to tick over time. So if you can buy this company at a fair price, which I think my DCF said it needs to drop like 14%, if you can buy it at that price, you might have a decent stock. I do think it is a decent stock. I wouldn't say it's a good company to go buy in terms of like there's going to be better opportunities and better businesses to buy, but on a valuation metric, it's looking fairly decent, and the company overall is okay. So I think decent is just the fair way to put it. Not good, not bad, just in the middle. You'll probably do well over decent over time. You probably won't do mega beating the market well, but you'll do all right. So yeah, take it as you will. Obviously do your own research. Have a look at some acquisitions as well, because I probably should have had a look at them before doing this video, but hey ho, I look at the numbers before doing deeper research. That's just the way I do things. But yeah, don't just listen to me, do your own research. I'm an idiot YouTuber on the internet who just makes these videos for like educational purposes and to help you guys analyse stocks. But yeah, I'm not a financial advisor or anything, so yeah, read my disclaimer and all that good stuff. If you enjoyed today's video, please subscribe to the channel. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos